Okay, assalamu alaikum everyone. Uh, my name is Adel, and here today I'm joined my colleague Ahmad, and together we represent a business called Nispa. Just a very, very quick light touch about what we do. At Nispa, we try and educate Muslims on different Sharia-compliant investments. The fundamental concept is, as Muslims, we should not be leaving our money in the bank, okay? We should be getting our money to work for us, and hopefully by the end of today, you'll understand why that is so important, and a little bit around what options you have as a Muslim in the UK in 2025, okay? We try and keep it light-hearted. If you have a question, feel free to stop us, inshallah. We'll try and answer it on the spot. We'll go up right until Maghrib, and then after Maghrib, we'll do a Q&A session, inshallah, okay? Hope that's okay for everyone.
We have to say this bit, and I apologize. And I would say, if there's anything, if anytime you can't hear me, just raise your hand, say, Ahmad, I can't hear you. But we will try and speak up. We have to say that the things that we're presenting today is not financial advice. And we can't give financial advice in a setting like this. It has to be personalized to your situation. Everything you hear today is guidance. So it just tells you about the different things you can do, but not what you should do. Just what you can do.
So, like we said, my name is Adel. A little bit about my background. I studied accounting and finance at university. And I then worked for a short period of time in the finance industry. I didn't enjoy it so much, so then I actually became a teacher of economics for about 6 years, alhamdulillah. And then I now work in digital consulting. But one of the key things is actually, for the last 10 years or so, I didn't really know much about investing, and I made a lot of mistakes. I lost quite a lot of money because I followed some uncles, I followed some family members that perhaps weren't the most educated. When my son was born, I thought this is enough, and I really want to start learning and doing it the right way. I have, alhamdulillah, some practical skills that I'll be able to help you, and then Ahmad will have a little bit about his background.
So yes, my background, I studied accounting and finance at university. I've worked in the finance industry for about 15 years. I'm a chartered financial analyst. I have a diploma in regulated financial planning, which is exams you need to give financial advice to people. And I have a couple of qualifications in Islamic finance as well. So we brought our skills together to try and educate everyone in the best way possible about the different options that you have when it comes to using your money in a halal way to make more money. Why, what, when, how? Questions that you may be asking when it comes to investing. Why? Why should you be investing? We're going to touch on this in the next slide in a bit more detail. What can you invest in is generally what we're going to be talking about today. The different things that you can invest your money into. Things like gold. You may have heard in the past, oh, why didn't you invest your money into gold? So that's the kind of stuff we're going to cover today. When should you have started investing? Can someone take a guess? When is the best time to invest? Today? The best time is 100 years ago. And then the next best time is today. It's one of those things. The sooner you start, the better. But it's great that everyone's here today, because if you haven't started, there isn't an age that's too late. Even if you're 70 or 80, it's not too late, but it's good that you are here today, and the intention is, inshallah, you take some sort of action point after today, so you actually begin. How? The how can be a little bit technical. We will touch on how to do things, but we're not going to go into it in too much depth. But inshallah, what we hope to inspire you, or what we hope to give you enough information to do, is that you'll have enough information to go away and Google the things that you don't know. But you will know the right questions to ask. So that's our intention, inshallah. Let's see how we get along with our intention. But we'll be judged by our intention, so it doesn't matter how we perform.
So I was going through this example recently with some people, and as Muslims, we've done like a lot of good work in the UK, especially, where we try to save our money. Okay, I'm second generation in the UK. My parents came here from Algeria when my dad was quite young. And the idea was get your kids into education so they can get a good job. That was the only thing that they tried to achieve. And alhamdulillah, they did that. They got us the education and we got the jobs. What they didn't do, unfortunately, and it wasn't their fault, they didn't learn how to put those savings into use. So if you had saved, for example, £10,000 in 2014, and you left it in the bank, and you say, look, that money, I'm saving it for my child when they get married, or whatever it might be. That £10,000 that you worked really hard for to save would be worth around less than £7,500 today. The cost of you not taking action is almost 2.5 grand. That's not something that is okay. You cannot afford to leave your money in the bank not working for you. Inflation, you've all heard of the term, will eat away the value of your money every single day. A Mars bar that used to cost 20p is now almost £1. A can of Coke that used to cost 30p is, £1 something. And it's going to keep happening. This cycle doesn't stop. So if we don't learn how to put our money to use, we will be the losers. Question for you all. Everyone in here have a bank account? Yeah, some sort? Okay, what kind of bank accounts do we have? Don't be afraid, we all have one, don't worry. Un-Islamic, yeah. I have Lloyd's. What do we have? NatWest, Nationwide. Okay, is that bank that you put your money with a charity? Are they set up as a charity? So the debit card that you get to spend your money, do you pay for it? The ATM card, when you pull your cash out, do you have to pay for it? So it's free. And then when you want to go into the store and you want to speak to a cashier, do you have to pay for it? No. But how does that make sense? How are they doing all these services for free? Because they're using your money to make money. They're not just doing it out of the goodness of their heart. They're not saying, oh, here you go, brother Adel, here's a debit card, go and spend as you want, and don't worry, we won't charge you. Because they are using every single penny that you have in the bank account to go and spend it elsewhere. Now, where are they spending that money? That's the question. Here's an example, here's a recent example that was saying Lloyds Bank, okay? Lloyds Bank was using money and it was investing in Mecca Bingo. So they're taking your money that's sat in your current account, sat in your savings account, and they're investing into these haram businesses. So the more we leave there, the more we are harming ourselves and the rest of society. So understand what is the concept of these banks and what are they doing, and try and put your money elsewhere.
Of course, we're not saying all the money in the bank that you have should be invested. We're saying some part of it should be invested, and it depends on your situation. But the key thing is, exactly as Adel said, when your money is sitting in the bank, it's invested anyway. The bank's investing it, and the bank is making money off of your money. Let it be you who makes the money off of your money, and not the bank, and let's do it in a halal way. And let's see how we can do it. So growth. Sometimes when we talk about investing, mention some numbers today. Like your money could grow 5%, 6%, 8%. We're going to throw these numbers at you. Brother, what's your name? Yes. Hussein. Hussein, imagine you have £1,000, right? And I said to you, you can get a 5% return. All right? How much money would you make on your £1,000 if you got a 5% return? You're on the spot here. You can ask a friend, what's 5% on 1,000? £50, okay? How would you feel about making £50 on your £1,000 investment? Does that sound interesting to you? It doesn't. To a lot of people, a 5% return isn't very interesting. Who cares about making £50 on their £1,000 investment? But the power of investing is over time. You make £50 the first year, perhaps, but then next year, when your money grows, it doesn't just grow as £1,000, it grows as £1,050. So the 5% growth is on the 1,000 and the 50. That growth is called compound growth, compound profit. And this is how we see it on this graph. We're imagining £10,000 invested at a 7% return, which is somewhat modest. It's not a crazy return, it's a modest return. Now you might expect 7 times 5, 3,500, that after 5 years you've made 3,500, but you haven't. You've made 4,000 on your initial 10,000. That extra growth is from the growth on your pre-existing growth. That is compound profits. That's why even modest returns, like 5%, 6%, 7%, can mean a lot in the long run. That's why we see £10,000 invested over 30 years is worth £76,000 with no extra money being added. That's just the money growing year on year at 7%. So it does work in the long run. But that's one of those things. It takes patience. If anyone is in this room today hoping to double their money by the end of the week, or hoping to replace their job with investing, unfortunately, it's not going to happen. Investing is a long-term thing. And we've just shown on this graph here the power of £5,000 invested with a 5% growth rate. So 5% on 5,000, £250 per year. But like I said earlier, it's a compound growth over time. And if you started with that £5,000 and you're investing it every year you invest £5,000, and you start at the age of 25, by the time you hit 65, you'd have saved over £650,000 by just putting away £5,000 per year. But it just shows you again, we say if you start at the age of 35, the amount you've saved up by the time you hit 65 is almost half of that amount. Because when you start 10 years younger, 10 years before, you have extra time for that money to compound. That is the power of investing. And inshallah, we'll see again towards the end, the extra power of investing, but trying to drive that point home. When we say 5%, it might sound boring, but in the long run, it's not boring.
Okay, quick activity now. Ideally, if you can just person next to you, 2 people around you, I just want to have a very quick 30-second chat. What are some of the things that you can invest into as a Muslim? Okay, see how much of a list you can come up with just with the people around you. 30 seconds, just have a quick chat.
At least 3 things.
At least 3. You get prize if you get 10. Okay, we got some things. So what, if we don't mind just shouting out a few things, what have we had?
We thought medical equipment, information technology, and between between gold and land.
Okay, it's a very, very good point. So when we say about investing, what ideally we want to come up with is if I put money into this thing, the intention is that this thing that I'm putting money into will appreciate in value over time. So when I go to sell it, I have more than what I started with. So prime example would be property. Inshallah, I buy a property, hopefully it goes up in value, I sell it, I now have more than what I started with. So I have invested money into something that has returned more money. What else can I invest into? Gold, yeah? People love gold, okay? Gold has risen over time. What else? But how would you get more money out of your medical equipment?
Some of them, because they have some medical equipment now, and then people actually invest in them, and then over time, I can give you an example. Shall I?
Yeah.
I can't give you an example, but some do it, especially with AI and with the robots, like the hyper fund, if you know the hyper fund that uses AI. So it's a good thing to invest in now. So hopefully in 5 years' time, when AI explodes in hospitals, it will have good returns.
Inshallah, not a real explosion, right? Just a...
It's good actually. They help with the reports, with...
So investing into businesses that make medical care.
Possibly, yes.
Okay.
In that sense.
Very good, yeah. So we can invest into a number of different things, and let's start going through them, inshallah. What is Sharia-compliant investing? It's based on a set of principles, but you know what? When we have these talks, sometimes it's really important just to clear any doubt. So investing from its initial point of view is just, I put my money into something, inshallah it grows over time, and then I can pull out more money than what I started with. And that's typically referred to as capital appreciation, okay? Where my capital has appreciated over time. Islamic finance rules and principles, when it comes to investing, obviously have a certain criteria that we have to adhere to as Muslims. Number one, when we invest into something, there must be an underlying asset. So there has to be something physical, if you will. Not necessarily I have to be able to touch it, but there should be something that is actually based on an asset. So think like property or gold, for example. Number two, obviously we all know we should be avoiding riba and interest and usury. And then we should also be avoiding industries that do not align with our values. So gambling, we can't be investing into anything that's going to make us money from gambling. Alcohol, what else can we not do? What other industries are prohibited? Drugs, okay, or illegal drugs. What else? What else would be prohibited for us? Pork, yeah, we couldn't go invest into a pork company. Anything else? Music, yeah, very good. Maybe halal beats, but everything else, not so much. Okay. And then finally, avoiding excess risk and uncertainty. Now, these two terms are called gharar and maysir. So we can't go into things that effectively replicate gambling because there's so much risk and uncertainty. We have no idea what's going on. Okay? Hopefully that's all clear for everyone.
The risk and reward relationship. This is a graph. It might look a bit complicated, but don't worry. We're going to break it down for you. On this graph are some things that you can invest into. Some of them you may have heard of, other ones you may not have heard of. And if you can't see, let me read them out for you. Savings accounts, sukuk, property, commodities, equity. This is not everything that you can invest into, but these are the major things that you can put your money away into as a Muslim in a halal way and allow your money to grow. And we're going to go into each one by one. But what we've laid out on this graph is we've laid them out from least risk to highest risk. Now, why would you want to take on more risk with your money? Because when you take on more risk, you have the potential to make more money back. It's not a guarantee, you just have the potential to make more money. So some people like taking on more risk. But what does it mean when you're taking on more risk? More return? Brother answered correctly. You could also lose more. When you invest your money, you are taking risk. Risk means you can lose money. And if there was no risk when you are investing, it wouldn't be halal anyway. Because your reward is for you taking that risk with your money. And that's what you have to remember with investing. There's always going to be risk with it. And as we step up from savings, sukuk, property, commodities, equity, you'll see that each one offers a potential higher return, but each one comes with more risk. So you can lose more money. But as long as you do it all in the right way, and inshallah you'll begin to understand that, you can take on the risk in a managed way. And that's what this is all about.
Some people, very, very popular in this generation, is investing to other things like crypto. Where would crypto sit on this graph? Towards Ahmad or towards myself? Yeah, over here. Yeah, because you can obviously make a lot of money, but equally, you could potentially lose it all. Okay, so understand this relationship. Muslims, unfortunately, keep getting scammed when they invest their money because they're trying to make their money too fast and they don't recognize the risk of certain investments. If someone says to you, you can make 40% in a year, okay, with no risk, they're lying. So if you hear that, you say, okay, red flag, this can't be true. How can I make 40% and take no risk? We're telling you here, the more risk you take, the more chance you could potentially, lose some money. So let's break it down one by one. Okay, so the bottom end of the account, we said savings account. As an asset class is a grouping of a particular investment. Okay, so things that have the same sort of traits. So think property as an asset class. Savings account or cash as an asset class is along the lower risk side. Okay, so you invest your money into Islamic banks. They take that money and they invest it on your behalf and they pay you back a rate of return. Now in the UK, we are very fortunate that we actually have some of these Islamic banks. If you go to Europe, there are none. They do not offer these for Muslims in Europe. If you go to large parts of the world, this does not exist. So in the UK, we are very fortunate. We have companies or banks like Gatehouse, Al Rayyan, Qatar Islamic Bank, Kuwait Finance House. There are quite a few. What you need to know about these savings accounts is, number one, you do not get a card. You do not get a debit card or an ATM card, okay? That sometimes is a bit of an odd thing for people to understand. That savings account is purely online. You go into your current account, you go to lloydsbank.com, you sign in, you send money from Lloyds Bank to your Islamic savings account, and it's there. And when you want your money back, you log on to Qatar Islamic Bank, you send it back over to your Lloyds Bank, and then you can spend it that way. You cannot spend directly from these accounts. 3 things you need to know. Number 1, they are protected by the government scheme FSCS. Does anyone know what that is? Yeah? Very good. Financial Services Confiscation Scheme. Doesn't count because you're the organizer. How much are you protected up to? £85,000 per person, per institution. Okay? So if the bank gets collapsed, the government will protect you up to 85K and reimburse you that money. Second thing you need to know is the type of account you open. Some of them are fixed terms. You put your money in, it is physically locked for 12 months, 18 months, 36 months. Okay? So check the details. Third thing that's worth noting is the rate of return. The rate of return currently on these Islamic banks is between 3 to 5%. Okay? If you want to see more of these, we actually have all of them live on our website, nispa.co.uk, and it pulls through all of the live rates, and you can filter as you wish.
So there is no reason that almost everyone in this room should not have an Islamic savings account. Instead of your money sitting in your normal account, why is it not sitting in an Islamic savings account, which pays you a rate of profit and not a rate of interest? A very safe place to keep your money, because remember, the government protects it. So there is absolutely no difference in you putting your money in BLME, Qatar Islamic Bank, Kuwait Finance House, Gatehouse Bank, Al Rayyan Bank. There's no risk difference between you putting your money there or one of the largest financial institutions in the world like HSBC. It makes no difference in terms of risk to you, up to £85,000. Yes, brother first, and then we'll come to you, sister.
They go in the same bank.
Yes.
Is that 85,000 per account, or is it?
It's per bank, so you can have multiple accounts within the same bank, but it's summed up across.
Or is it?
Yes, so it's per bank, per person, not per account.
So if you still get profit from the saving in an Islamic account, what's the difference between that and the?
Great question, and shame on everyone else for not asking that question. What's the difference? Because it seems very similar. One pays your rate of profit, the other one pays your rate of interest. They both seem around 3-4%. They both seem very similar. Here is the difference. Number 1, a bank charges interest. When a bank charges interest, that's what it pays out to its account holders. It makes money off interest, it pays interest. An Islamic bank doesn't give out loans. How does an Islamic bank make its money? Through halal home purchase plans. Through it extends finance to people to purchase homes by buying part of the home, collects rent. That's profit for the bank. It then pays that profit to account holders. So it's somewhat similar. However, at the same time, you have to remember that these banks aren't in the industry of giving out loans. They give out Shariah-compliant finance, generally to home purchases. Now, these rates of return aren't guaranteed. However, when they say it, they've always paid it historically. But if the bank has a very bad time, they may decrease the rate. But your money is not going to go down in value. If you put in 10,000, it's not going to go down to 9,000 or 8,000. It's just that the profit rate might decrease. So very, very low risk, but at the same time, you'll notice very low return, 4%, 3%. It's not very exciting, but it's a nice place to park cash.
So one thing to also note is, remember I said earlier, Lloyds Bank gave money to Mecca Bingo? These Islamic banks are never going to invest or put their money into any of these institutions. They're not going to go give money to an alcohol company. They're not going to go and invest in a pork or another financial bank. They will be very careful in terms of where they actually provide their money. Secondly, I'm going to say something very controversial, so please take it with a pinch of salt. Sometimes some two things might look exactly the same, okay? You could argue, from a Westerner's point of view, what is the difference between a boyfriend and girlfriend and a husband and a wife? The difference is the contract. And it's the same thing sometimes when it comes to Islamic finance. The contract holds a lot of weight. So whilst things might look exactly the same, there's a much more thought that has happened to go into the contract to make them significantly different. But of course, please do your own research and make sure that you are happy with anything that you hear.
Yes, brother.
So are we able to look into how these banks invest and which areas they invest into? Are they transparent enough to tell us that, or just rely on them to do the right thing?
They don't go into the granular detail about the exact things where your money go, but you will see on their websites generally the type of business that they do. And it's generally in the home purchase plans or large property purchases for businesses and commercial reasons. But you can't see the granular detail. Yes, brother?
Just on that though, but we do go and open up a HSBC or NatWest account and don't really look into it at all.
That is very true. You don't. You trust them.
Just on that one, sorry if you don't mind. So at the moment, Islamic home finance is more expensive than going to NatWest HSBC.
It is more expensive.
Where all of us get confused is the fact that it says percentage.
Correct.
It's just a percentage of something.
Correct.
There's a percentage of your rent that you pay to the bank.
Mm-hmm.
The other one's literally
Interest.
interest. And for us to lower the percentage that we pay on our Islamic finance, we need to put money into those banks so they can invest, and there could be more banks that open up. Because on the other side, there's hundreds and hundreds of mortgages that you can get, and that's why it's low.
Great point that brother made. And just to reword it, the Islamic financial institutions, they're the ones giving out halal home purchase finance plans. So in other words, halal mortgages. If more Muslims were using Islamic banks, the rates of, some people don't like to call them mortgages, but I'm going to call them mortgages so it's just easier for everyone. The halal mortgages would be cheaper for everyone. But the problem is Muslims are a bit afraid of using Islamic banks because they think, oh, I don't know how it works. But what are you doing in the end? You put your money with HSBC. You put your money with Lloyds instead. If that's the option, Islamic banks are going to win every time. So let's move on to sukuk. So now we're moving up a level of risk. More risk, what do we mean? More risk means more return, potentially more return. But now you've seen, I put down minus 5% to plus 8%. So you could potentially lose money. Now, can you lose more than 5%? Yes, you can. You can lose 10%, you might lose 12%. But this is a general annual range that you might get when investing into sukuk. Sukuk, what is a sukuk? Sukuk is a multiple version of the word sek, and it's kind of like a check, but it's an Islamic version of financing, which is done on a large scale. Who's ever heard of a bond?
Not James.
So a bond is an instrument in traditional finance, which is very similar to a loan, but it's done on a very large scale. It's like when companies like Apple want to borrow $1 billion. They go to the bank, a bond gets issued, investors buy the bond, they're the ones that give money to Apple. Apple then pays a rate of interest, and that interest goes to the bond holders. Sukuk are very similar to versions to that, but done in a halal way, like large halal loans, but it's not a loan. Shall I give the example?
Sure.
Okay, let's give the example of how it would work in practice. So how can you have a halal loan? Well, imagine there's a company like Samsung, okay? Samsung wants to build a factory. Imagine this is a land that Samsung wants to build a factory on, and Samsung owns this land, this room that we're in. So Samsung goes to the bank, says, I want some money to build the factory, but I want to do it in a halal way. The bank says, okay, sell me this land. This exact land you want to build the factory on, sell it to me. Samsung goes, okay then, I'll sell you the land. How much for? 10 million. Samsung gets 10 million. Now it has the money it needs because it sold the land. It wants to make the factory right here. So who does it pay lease payments to? Who does it pay rent payments to use the land? It pays it to the bank they just sold the land to. Then after 5 or 10 years, there's an agreement for Samsung to buy back the land from the bank for the same price it bought it at. Some people don't like the structure of sukuk. Some people think there are some Islamic inconsistencies with how it works. But in the majority of the Islamic finance world, they are accepted as Sharia compliant. And I just gave you an example of how money can be transferred from a financial institution like a bank to an individual and payments be made back. So very similar to a loan, but done in a Sharia compliant way because there's an asset behind it. In this case, it was land. So that's what sukuk are. And you can invest into sukuk. And the rates of return that you can get on sukuk are between 8% in a really good year or down to minus 5% in a bad year.
Okay, let's go up. Let's go up the ladder again. So more risk, more return. Now, property is one of those things that obviously we're very familiar with. It's brick and mortar. You buy it, you hope, you put some tenants inside, and then you get some rental payments, or you buy it, you flip it, and you sell it. Okay, everyone's happy with that concept. Now, there are new ways of investing into property where you do not have to be the one in charge of managing it. So you don't have to find tenants. You don't have to try and sell it. You don't need large amounts of cash so that you have to buy the whole thing by yourself. You can simply use smaller chunks of money and get exposure to that asset class. Okay? Has anyone heard of any of these companies? Curate, Nesta, Bayuti? Hands up just to see if anyone. Wahid, yeah? Yeah, a few people? Okay, yeah, very good. So they work slightly differently, and it's worth noting, just to understand. It's a little bit technical, but let's see. In some instances, you can invest directly into the property, and you own a fractional amount of that property. How would you make money in that transaction? Can anyone tell me? Rent, very good. So you get rental payment and capital gain. So when they sell it, you get a portion of that sale. Okay, so that one's fairly straightforward. And that model exists when you invest in via like Bayuti or Wahid and Acorn. Nesta is slightly different. Different. Wow, third time. Okay. So with Nesta, imagine Ahmad over here wants to go down the traditional route of buying a house, painting it all white and selling it, okay, which is called a flip. He needs some cash for a short period of time. So you don't get a mortgage, you typically get something called a bridge loan. So he comes up, but he wants to do it in an Islamic way. So he will go to a company like Nesta and say, I need £50,000, okay, for 6 months. So Nesta will then go to individual investors and say, you can buy a portion of this financing and you will get a profit payment as a return, okay? So each month, when Ahmad is paying back for that financing, that flows back to me as an individual investor. So that is property financing. I do not have any ownership technically over the property, okay? I'm just involved in the financing of the property. So it's very different. And that one is done on a house-by-house basis. So house by house, house by house, house by house. Curate Capital, which is a sister company of the guys at Islamic Finance Guru, if you ever followed them or heard about them, what you can do here is you can invest into a fund, which means basically a large collection of multiple houses. Okay, so rather than investing at one house and being exposed to the potential risk of that one house, you can invest to 5, 10, maybe 15 or even 20 houses at the same time. And again, you can get profit payments and you can sell down your investment and make your money back in that way. The key thing to note here is, obviously we've gone up the radar now. So you can make more money. You can make 7, 8, 9, 10% in a year, which means if you can do that, you can also lose. And you can lose more than that, okay? Because there are always risks involved with any of these investments. So that's property. Any questions there on property?
On the Nesta one, when Ahmad pays back the investors that have lent him the money,
Yeah.
how do they make their profit? How do they make the money?
Who?
Does he pay more than he?
Yeah, he's paying a large. Say he might be paying, let's say, 12%, and the investor gets about 9%, and then Nesta will take the cut in the middle to do the surveying and all of the kind of the compliance stuff around there. So what is the key difference here compared to perhaps with interest?
I don't know. That's what I'm asking.
So there would be an underlying asset, okay? So whereas an initial traditional mortgage, you are purely being lumped with the debt.
No, you said something about bridging loan.
Yeah.
So a lot of people use bridging loan as in they buy a house and they get the bridging loan to buy the house.
Yeah.
And do it out. and then they go to a traditional bank, and they've done it out, get a higher valuation.
Yeah.
So then they can draw out more of their money. So that's what they use the bridging loan for. But here, how is it? Because the bridging loan traditionally very expensive.
Yeah, yeah.
You get it for 6 months, 12 months. It's very high interest. How is this one halal? That's what I'm trying to call.
Have you heard of commodity murabaha?
No.
So we're getting technical here, but the way Nesta works is based on a concept called commodity murabaha, which is where when the money is given to the person who wants to borrow the money, it's done in exchange for a metal. So there's the underlying trade in a metal like copper or iron. The metal is bought and sold. So there is an underlying asset for what the transaction is done for, but the underlying asset really has no relation to the actual trade. Some scholars have issues with commodity murabaha and how it's done. However, it is prevalent in Islamic finance at the moment. I'd encourage you to research commodity murabaha because it's very interesting, but we start to get a little bit more technical into how things work. But that's just Nesta. Traditional platforms like Bayuti, Wahid, you can invest in property from just £50. You don't need £1,000, you don't need £10,000. You put £50, you own part of a property, you get rent payments, and you get capital appreciation when the house price goes up. Okay, so imagine you bought a house, a whole house, across the street in Streatham like a flat. Risk number one, there's a fire. There's no insurance. You lose all the value. Risk number two, house prices just go down in London. Risk number three, riots happen in the area and the house values go down. There's so many risks that can happen with property if we're being realistic about it. So you can lose 10%, you could lose more than 10%. And that risk is compounded if it's just one property. Because with one property, anything crazy can happen. You own one property, perhaps a car crashes into it, the insurance on the house, if it had insurance, which it shouldn't do if it's Shariah-compliant, technically speaking, it's not going to be covered for a lightning strike or a car crashing into it. So you could lose a lot of money. So there is risk with all of these things and how they work. So yes, you could lose 10% on property. But generally, you wouldn't expect that on a normal basis. Yes, brother?
Are any of these schemes endorsed by any Muslim scholars?
Every single one of the platforms here have been signed off by a scholar or a group of scholars. Generally, it's Mufti Faraz Adam, who is one of the leading scholars when it comes to Islamic finance. Mufti Faraz Adam.
So all of them have to go through a Sharia board or a Sharia review to get signed off. So any of the investments we today have talked about will have sign off. We are not saying there is complete ijma' or consensus on these matters. So it is always worth double checking and making sure that you are happy. One of the big tricky things with Islamic finance is it's not done on like a madhahib basis. It's not done like the Malikis say this or the Hanafis say this. We haven't got to that level yet. It's still very much in it, if you could say, in its infancy.
Gold and silver. Who's already invested in gold? Most likely, someone in this room already has gold. Someone in your family has gold. You may have bought it as just as jewelry, but maybe at the time you were thinking, oh, this can be a bit of an investment as well. So you go to the shop, you buy a gold bracelet, you buy a gold necklace, great. I don't know if you've checked the gold price lately, but you've been doing quite well. If you bought gold 5 years ago, 10 years ago, you've done well. So congratulations to you. But what you might not have realized is when you bought the gold as a bracelet or as a necklace, you paid above market price. You probably paid 5%, 6%, 7% above market price. Now it's completely halal to buy gold, especially in that physical form. But when you buy jewelry, you pay extra for the design of it, which maybe you want to, maybe you want the nice look of it. And you pay extra because the brother in the shop has to make a profit, or the sister who runs a gold shop, okay? That's just the reality of it. Can gold go down in value? It can. Some people think gold only goes up. That is not true. There are years where gold goes down in value, and some years where it goes down significantly in value. How about silver? Does silver go up in value? Can go up, it can go down in value. And silver is very similar to gold. It goes up in a very similar way, but a bit more in good years, and it goes down more in bad years. So how can you actually invest in gold? Or before that, let's talk about how much money you can make on gold. How much did gold go up, let's say last year? Who knows? Roughly percentage terms. How much did gold appreciate in value last year? How much did you say? We get 40%. Any other guesses? 18.
80. 80.
1 8.
Okay.
So this is quite close. It was between 20 and 25%, depending on the currency and how you look at it. But that's a crazy good return for a single year. Last year was a good year for gold. And so far, from the start of the year till now, gold's up another 15% so far this year. Gold has done well, but there are years where gold does nothing, doesn't move in value. Does gold generate income? If you keep gold in your safe at home, does it make money for you? No. So some people don't like gold because it doesn't generate something. Whereas if that money was invested in a house, the house would pay you rent. If that money is invested in an Islamic savings account, that would pay you profit. If it was invested in sukuk, that would also pay you profit. But gold, it doesn't pay you anything. So some people don't like it. And there are sometimes 5, 6, 7 years in a row where gold will go up 2%, down 3%, up 2%, down 3%. It does happen. You just have to understand, nothing we're talking about today should make you think, oh, I'm going to put all my money there. Even if I say gold went up 25% last year, it doesn't mean put all your money in gold. That's what you have to understand. And we have a chart here showing the annual moves of gold. And as you can see, there was one year in 2013, where gold was down 30% in a single year. So it is not an asset that has no risk. But there are better ways of buying it if you did want to buy some than going down to the local jeweler and buying a necklace. Way number one is buying actual gold bars because they're cheaper, because they don't have any design in them. Way number two is buying a fund. A financial instrument that buys gold that has been certified as Sharia-compliant, such as the iShares Physical Gold Fund. We're going to touch very lightly on how to actually do this towards the end, but that is a fund. In it, there is gold. You own a portion of that fund, and when you buy that fund, you buy gold at exactly the price of gold at that second. You do not pay above or below, which is much nicer than buying it from the shop, because from the shop, you pay 2 or 3% above, and you don't have the hassle of storing it. When you have an online account and you buy gold like this, all done in a very regulated way, you don't have to store it anywhere in your house. You don't have to worry about your house being robbed, fire, anything like that. It's all online. That's gold, that's silver.
Okay. The final few things in terms of the what. Just cast your mind back. The reason why we're doing this is so that you understand, okay, I worked, and at the end of every single month, I can save £100. I can save £200. I can maybe save £1,000. The whole point is, where do I put that money? Okay? And what we've covered so far is some examples of where you can put that money. And the idea is you do it every single month. Every single month that you are working and you are saving, you are putting your money away into investments that are appreciating in time, inshallah. Otherwise, what happens to your money that you save? Losing value with inflation. So it's a no-brainer, right? The idea is just to understand where can you put it, what makes sense for you, and then doing it accordingly. Individual stocks, interestingly enough, this is like one of the first things that people do when it comes to investing, and is one of the hardest things to do. So individual stocks is very simple as a concept. There are large organizations that exist in the world, like Apple, Microsoft, Nvidia, Google, whoever it might be. What they do is sometimes they sell shares in a way to help them raise money to go and build more factories, buy more offices, whatever it might be, hire more staff. So they do it so that they can raise more money. Now, to do that, they sell equity. So they sell a portion of the business. So you and I can actually go and buy a share of that business, and now we are shareholders of that business. So for a small amount of money, starting as maybe £1, I can own a piece of Apple. And if I have enough money and I keep buying shares of Apple, what would happen? I could become the sole shareholder of Apple. I could become the owner of Apple. Okay? But I'd need about, I think, 1.3 trillion? So a few years, inshallah. Yeah, make dua. But that's how stocks and shares work, okay? And they're traded on the stock exchange. And this is technical, but I think it's really important because most people don't know it. The initial time when a company has an initial public offering, when they sell their shares for the first time, that money will go to whoever was the previous shareholder. Okay, so typically speaking, maybe the owner of the business or whoever had perhaps supported in the growth of that business. After that, all of the trading of the shares is in the secondary market. So to give you an example, think when Apple sells a laptop for the first time, yes, the money goes directly to Apple. But if I now own that laptop and I sell it on eBay, does Apple get a share of that? No. Okay, so that's the secondary market. The secondary market is like eBay. It almost has nothing to do with the business. Yes, there will be some consequences, but in theory, the money does not flow back to them. It just happens between you and I. We are selling the shares between us. Okay, two things to note. When you invest into an individual stock, can you make a lot of money? Yeah, you can make a lot. Nvidia, for example, went up about 1,500% in the last 5-6 years, I think. Okay, that's a crazy return. But what does that mean? If I can make that much money, I could lose all of it. If I invest into a single company, I could lose all of it. Can anyone think of an example where businesses have come bankrupt? Anyone used to go and get a DVD on a Friday night from a local? Blockbusters, gone. Okay, Kodak, one of the largest camera providers in the world, didn't adopt the digital wave, almost went bankrupt. What's the American one? Sears, huge organization over there. It happens. No company has stood the test of time. No company has lasted 1,000 years. Okay? So when you invest into a single company, yes, you can make a lot of money. And I'm looking at the brothers here, because brothers you typically love to invest into single stocks. It means you can lose a lot. You could lose all of it, potentially. If you want to do it, no problem. You just need to check the Sharia compliance. I'm not going to go through the criteria now. If you want to ask afterwards, I'm happy to. But there are companies out there that will do the checks for you. Musafa, you just go on the website or download the app, you type in the company name, and it says Sharia compliant or not compliant. Okay? That's all you need to check. Equity funds. I'm going to give you 30 seconds in your little groups to see if you can come up with a definition of what is an equity fund. 30 seconds, go. Okay, let's, I heard a few answers. Does anyone think they got a really good answer of what is an equity fund? Who can, in one line, tell me what it is? Okay, Mr. Champions League.
It's like you get a group of stocks and you can basically invest into that fund and it invests into like each of the stocks.
Inshallah. Superb. Exactly. So an equity, like I said, is just a small portion of an individual business. And what did I say was the huge risk of investing into one business? You could potentially lose a significant amount of money. An equity fund, think of it as just like a pick and mix bag of different companies in it. Okay? It might be 100, it might be 200, it might be 1,000 companies in this pick and mix bag. So when I put my £100 in, it gets split across the number of companies within that equity fund. Not necessarily split equally, that's more of a technical conversation later on down the line, but that's all an equity fund is. A fund is a pool of money from investors invested into a pool of assets. Okay? So you're investing into multiple companies at the same time. What's the benefit of that? Exactly. And the concept in technical terms is diversification. You diversify and you spread your risk. So now, if you think, for example, COVID 2022, 3? What was, 2021, sorry. 2001. All right. So in COVID year, would you expect some companies to go bankrupt? Yeah, some did. Would you expect 300 of the largest institutions in the world to go bankrupt all at the same time? No. Potentially not, okay? It's a much lower chance of that happening. And that's the concept of diversification. What I want to drum home is you can still see those big drops, okay? The financial crisis, 2008, equities, or in general, if you're investing into equity funds, potentially you could lose almost 40% of your money. Please put this in real terms because I think people don't appreciate it. Imagine you've worked all your life and you've saved £10,000. Next year, you want to buy a house. You invested into equity funds. You put £10,000 into this investment. It could go down by £4,000. You're now left with 6K. You go to buy your house, you have less money. Understand the risks and reward of investing. Percentages are critical, okay? However, if you were brave and you understood the risk and reward and you had a longer time horizon and you waited, you didn't sell, the next year was back up, 20%, up again, up again, up again. So the idea is understanding not only the investment itself, but the risk and reward profile of that investment so you are better aligned to that investment, okay? No, it's a very good point. And the brother made the very, very critical point. When you invest into these things that perhaps decrease or increase in value, you do not actually materially realize that value until you make the sale and you withdraw the cash, okay? And I'm not going to say hold it or sell it because that would be financial advice.
Remember how we said some stocks are halal and some stocks are not halal? I'm going to give you a company, you tell me if it's halal or not. I can't think of any haram companies. Think of one. No one's going to know Diageo. Heineken. Is Heineken a halal company to invest into? No, it's not. I shouldn't be.
0% alcohol now.
How about a company like Walmart, Asda? Are they halal or not? Partially. It's a yes or no. Can you buy it on yes or no? No?
You can, but it's a sticky one because of what they invest in.
Okay, so some parts of Asda people are not so sure about. Okay, let's give an easy example. No, even easier one. Apple. Should Apple be halal? Lots of people say Apple's not halal.
Can I just say apple is halal but unethical?
Yeah, we're not touching on unethical yet. We'll touch on that in a bit. But safe to say that knowing what company is halal to invest into or not is actually quite complicated. Because even if a company seemingly does everything halal, it may still make some money from interest, from money in the bank. So it's complicated. So doing this stuff can be quite complicated, trying to find out what company is halal or haram. Some funds that contain these individual companies were made specifically for Muslims. They're called Islamic, Shariah-Compliant funds. Now, there are about 10,000, 20,000, 30,000 funds that investors in the UK can invest into because the UK investment market is very well developed. The UK is really developed in that area. How many of those 30,000 do you think were made specifically for Muslims? Guess. We got 2 here. Any other guesses? 5,000. Any other guesses? 20. Brothers got it roundabout correct. About 20 of the 30,000 were made for Muslims, even though Muslims are about 4% of the UK population. Why? Because Muslims don't really get involved. Why? Because the banks don't really care about Muslims. Why? Because Muslims don't really have any money, so why should anyone care about them? But this is an area which is moving forward now. Muslims are more conscious about how they invest their money. They're more conscious that they have to do it in a Sharia-compliant way. More funds are coming out. There are enough options for Muslims, and there are about 20 funds, equity funds, which are Sharia-compliant, which are made for Muslims. You can.
Perfectly.
Where can you find it? I don't know why this page is a bit blurred. I think maybe it didn't load. Maybe we didn't download it properly. Our fault. But on our website, nispa.co.uk, we actually list out every single Sharia-compliant fund, so you can see the full list there. So if you want to see the full list, we have it there.
I think we'll stop here for Maghrib, and then we have about 44 slides afterwards, inshallah.
So we had this page up before, and it has all the funds on it. And you can see them up here on the screen. This here is a fund that invests into sukuk. How do you know it invests into sukuk? Easy peasy. It says sukuk in the name. Why does it say HSBC though? Are you giving your money to HSBC? Are you investing your money into HSBC? No. HSBC is just the manager who buys the sukuk and puts them into the fund. So this is a list that you can find on our website, and it's got all the different funds in there. Be it sukuk, be it equity, be it gold. And my apologies to the people that joined after Maghrib, because these are concepts that we covered before Maghrib about the different asset classes. Here we're just showing some of the different funds that you can invest into. And you see this one says sukuk in it, this one says sukuk in it. This one says multi-asset, so it invests in property, sukuk, equity, all in one fund. This one is also a sukuk fund. I don't know why we're not showing any equity funds, but I just took a screenshot of one part of the website. But that's all this page is. We're just showing that the resources out there if you want it.
Yes, brother.
Is it allowed to invest into the S&P 500?
Okay, great question. You tell me.
Thinking, no.
Why not?
It's not on, it would be on this list or something.
Forget the list. What does the S&P 500 actually represent?
Top 500 companies.
Top largest or the largest companies in the US, the top 5 or the largest 500 companies in the US. Do you think some of those companies are dealing in impermissible sectors like alcohol, potentially weapons? Yeah. So do you think it's permissible to invest in that fund? No. Yes, so there's many reasons why it would not be permissible. But there are filtered versions of the S&P 500 where they get rid of those that are made for Muslims. Great question though, because everyone, if you have non-Muslim colleagues, they always talk about just put your money in the S&P 500 and forget about it. Okay, we've covered a range of different investment options today. What was the first thing we spoke about in terms of the lowest risk, lowest return investment option? Savings, okay, so Islamic banks. What was the next one? Sukuk funds. Okay, we spoke about the fund structure of sukuk, where you invest into multiple different sukuk within a fund. What was the next one? Could you stop? Property. And then after property? Commodities like gold and silver. And then? Equities. Okay, we didn't cover things like crypto because that is not so regulated and not something we really talk about. Okay, there are many options out there for Muslims. Here is a page of just some of them. Okay, and they all do slightly different things. So for example, Amal Invest allow you to invest into stocks and shares, and they give you the opportunity to not only filter Sharia compliance, but also ethical stuff. So anyone that is complicit in the genocide, you can potentially filter them out. Okay, we have done a full-length YouTube video on them if you want to watch more detail. Cardus, anyone heard of Cardus? Or Cardus, sorry. Anyone heard of them? So they provide SME financing. Bonus point, what's SME? Very good, yeah, basically small businesses. So you provide them financing so that they can grow, maybe buy another, Chaiwala was on there. Okay, they wanted another branch, so they went on there to get some financing. Bayuti allows you to invest into, we covered it, property, very good. Curate has a range of different options, halal stocks, Acon Property. Acon Property is not a Muslim company, but they have come out with a Sharia-compliant option, again, which has been reviewed by the Sharia board, using Amana advisors. Nesta Property, Wahed have a range of different things. What I want to drive home is, and I don't want to offend anyone when I say this, but we are in a point in time where we are more fortunate than we recognize. We constantly get emails from people in France, people in Germany, in Netherlands, in Norway, in Sweden. They do not have a fraction of these options. And we do not know at what point we might lose these options. Because we constantly say, oh, as Muslims, we can't do this and we can't do that. If we do not put our money in, if we do not learn how to start supporting these companies and supporting ourselves, they'll disappear. And all you're going to be left with is the HSBCs, the Barclays, the Vanguards, and all of that stuff. So if we just keep complaining and pointing the finger, Al Rayyan is a great example. Al Rayyan entered the UK market to support the Muslims in the UK. A few years ago, they pulled out of the retail market because, does anyone know why? Anyone know why, right? Al Rayyan doesn't really do like mortgages or halal purchase plans anymore for the individual investor. No? Yeah, Muslims didn't get involved. The market was huge. Muslims just didn't get involved.
Just to be clear on this page, these are companies, almost all of these companies were made for Muslims to invest in something or other. Okay, you don't have to use these options to invest. You can invest in gold without any of these options. You can invest into equities without any of these options. You can invest in sukuk without any of these options. You can invest into savings accounts, Sharia-compliant savings accounts without any of these options. These options here are just investment companies made for Muslims, apart from Acon, which is for both Muslims and non-Muslims. They're just avenues to allow you to do it in different ways. Okay, just to make that super clear. Yes, just a question.
What is Amal? Is it like Vanguard?
Amal Invest is a platform which filters a fund, which is non-Sharia compliant, removes the non-Sharia compliant stocks, removes the stocks that are involved in Israel, and then kicks out a new fund for you. It's a bit technical with how it works, but that is their service.
So it's like Vanguard. Can you invest?
No, they're just if you think of them, they're not a financial institution, they're a technology solution. Okay? So they are providing you a technology solution to try and do this. So effectively, through their coding and through the programming, they've created a nice solution where you can start to, and if you want more information, like I said, we have a YouTube video, 2 actually, where we go through it step by step, exactly what is happening.
Vanguard is a fund manager. They actually make the funds and they put people's money into the funds. Amal Invest do not do that. Brother.
With a company like Acon, where it's non-Muslim but with an Islamic option,
Yes.
isn't it risky because they also deal in non-Islamic things as well?
Their Sharia compliant option on Acon Property Invest has been signed off by Mufti Faraz Adam as well, who is the leading scholar in Islamic finance in the world probably at the moment as well. So they are very conscious that their Sharia compliant offering is actually Sharia compliant. So there's no risk from there.
And in terms of your point, it's not like a cross-contamination of the money. It's very much segregated for that particular investor. So either for that property or for that pool of properties, that's how they'll do it.
Are these options available internationally or only in the UK?
Some of them are international. For example, Amal Invest is international. Halal stocks technically to be international. Curate Capital offer their services internationally, but other ones, they're more focused on the UK market, like Cardus and Bayuti.
I think what she meant was people from other countries investing.
Exactly, that was my, as in you can, if you're abroad, use certain things, like ML Invest, it doesn't matter where you are in the world, you can use it. Halal stocks, similar. Wahid, depends where you are in the world, so it depends on all of them, but what we're focusing on here is investors in the UK. So we spoke about savings accounts, sukuk, property, commodities, equity. Which one should you invest into? Which one does the best? And this is the bit you've all been waiting for, because I'm going to say something and then you're all going to invest into it. Right? Wrong. Obviously, it doesn't work like that. There is no one thing that does best. And this crazy chart is supposed to display just that. So here we have, where do we have? Equities. Okay, just consider this light green box, equities. 2018, one of the worst. 2019, good. 20, good. 21, good. 22, very bad. So equities some years do very good, some years do very bad. Let's look at bonds. So bonds is, the Islamic version would be sukuk. Somewhere in the middle, somewhere in the middle, somewhere in the middle, oh, very bad. Somewhere in the middle, okay, bad, bad. But other years it does do well. Emerging market equities, these are just stocks from developing countries. Some years they do very good, but some years they do very bad. The reality is, you never know what's going to do best next year. If you had to try and predict, should I put my money into gold or equities or sukuk, what's going to do best next year? No one knows. Even myself, with 15 years of experience in financial markets, trading and investing, the highest qualifications that you can technically get when it comes to investing, I have no idea what's going to do well next year and what's not going to do well next year. So what do? It involves buying a mixture of different assets. A bit of gold, a bit of equities, putting your money into cash. But it's not just, oh, this is the special mix. 10% in cash, 10% in sukuk, 10%. There is no special mix. It depends on your situation and what you're investing for. So let's use an example. Brother here wants to get married next year. Are you married?
No.
Okay, mashallah. Brother here wants to get married. Okay, next year, inshallah. Okay, he's saving for a big wedding. So one very lucky sister is going to have a big wedding. He's already saved up £10,000 for this big wedding. £20,000, let's call it. Brother saved up £20,000, mashallah. Everyone say mashallah, mashallah. He saved up £20,000 for his big wedding. He's invested it all into equities. Okay? Because he wants to make more money. Now, what do we know that can happen with equities in a single year? They can drop massively. Brother, are you married? Okay, pass then. Brother, you married? You married? Okay, second brother's also not married. He's also saved up £20,000 for a wedding next year because he's going to find his wife and get married in 1 year. Quick, quick, quick. He's put his money in an Islamic savings account. What's the difference? There's no risk. There's no real risk. He's going to make his boring 2, 3, 4%, whereas this brother, he's taking a lot of risk with money that he needs next year to get married. Perhaps in that year, equities does very well, and his 20,000 grows to 25,000. But he doesn't need to take that risk. What he needs to do is keep that money safe. So he doesn't need a high risk investment. So the right way to do it is to choose the right level of risk for whatever you're investing for. So the right thing to do for a goal in 1 year's time or 2 years' time, keep it low risk, low return. But if we're saving out for 30 years for retirement, remember that who knows how much you get from the government for pension? You're not allowed to answer if you're actually receiving your pension. But anyone who's young, how much do you receive from the state each year, in theory, for your pension? Sorry? Roughly 10, 11, 11,500 pounds. That's how much you receive each year from the government, if you even get it, okay? To be honest, that's not enough money to live on, okay? Now, if you are quite young and you're saving for your pension, there's so many years to go. Okay, so now imagine our brother again. He's got £20,000. Now he's saving for his pension. He puts £20,000 into equities, high-risk asset. Bad thing happens. COVID-20 happens. Stock market collapses. His £20,000 has dropped to 10,000. Remember when the brother said earlier, you can choose when to sell. Sometimes you can't choose when to sell because you need the money. But if you're investing for 30 years' time, it doesn't matter if it's dropped in year 1 or year 2, because year 3 it probably grows, year 4 probably grows. Now, why do equities generally grow year on year? Why do businesses grow year on year? The first $1 trillion business only came about a few years ago. Nowadays, there's about 10, $1 trillion or above dollar businesses. NVIDIA, I think, is $4 trillion in value. Why do companies keep getting bigger? Kind of, but that's not really the answer I'm looking for. Why are companies getting worth more? Technology is developing, kind of. So, market's growing. Why is the market growing? The population growth. Not only population growth, money loses value year on year. That's why gold increases in value. Why do you think a block of gold is worth more now than it was 100 years ago? It's not worth more. It's worth exactly the same. It's the money that's worth less. They say a block of gold could have bought you a house 100 years ago. A block of gold can buy you a house now. But 100 years ago, you buy a house for £10,000. Nowadays, you buy a house for $500,000. It's the money that loses value. The assets keep their value. So that's how you have to think about it. And that's why there's no such thing as the best investment, but there is the right mix of investments for your goal. That's how it works.
Okay, final part. In the UK, no matter how you earn money, you are going to pay tax. So if you have a job, what do you pay? Income tax. If you have a business, what do you pay? Huh? If you have a business, what do you pay? Corporation tax. If you die, what do you pay? Inheritance tax. No matter where it is that you're getting money from, you are paying tax. If you buy a house for investment purposes and you sell it, do you know what you pay? Capital gains tax, okay? If you have a savings account, okay, and you earn interest on it, do you know what you pay? There's a tax on the interest income, okay? There is tax everywhere. If you have a business and you pay yourself dividends, do you know what you pay? Dividend tax, okay? So please understand the concept. No matter how you earn money and you're a UK resident, you are going to be paying tax one way or another. However, the UK government has provided a very small breathing space in the investment landscape, whereby you can earn some money tax-free. You just have to do it in the right way, okay? So these accounts are called ISAs, individual savings accounts. They are effectively nothing. They are just accounts. They're empty, there's nothing in them. They're just tax wrappers. But what they do is they protect you from the tax. So just think of it as the government breathing space. This is just a little perk that the government has given us to try and make some money tax-free. So let's walk through an example. The stocks and shares ISA is a tax wrapper where I can invest into a few different things, and the money I make is tax-free, okay? So let's go for example. Rule number 1, you can only deposit a maximum of £20,000 in a single year. You can do £1, you can do up to 20,000, it doesn't matter, that's just your limit, okay? A limit of 20K. Everyone understood so far? This is a hard concept that most people don't know about, okay? So you have a limit of 20K per year. Whether you do it monthly, daily, it's up to you. So I open up an account. Anyone heard of Trading 212? Okay, Trading 212 is a platform whereby you can make some investments. Now they have two types of account. You have the stocks ISA and the invest account. In effect, they do the same thing. You can buy NVIDIA in here, or you can buy NVIDIA in here. It doesn't make a difference. The big difference is, if I make money from my investment, then I get treated differently, okay? So I log on to Trading 212. I open up the invest account because I want to invest. I've learned how to invest now. And I've deposited £20,000 because I was sitting on a lot of cash. The next thing I do, okay, here's another example, AJ Bell, Hargreaves Lansdown, in case you've heard of these accounts. Same thing, two different types of account. Next thing I do is I invest it. I invest it, let's say, into NVIDIA, for example, a company. Now I invest it into NVIDIA, and in that single year, my £20,000 investment has gone up to £100,000. MashaAllah, amazing, okay? Chaiwala on me, all right? Now, what's worth noting is, because I put money into this account, it doesn't change anything in terms of my withdrawals. I can still pull my money out whenever I want, okay? The big thing, the big difference is now, because I invested in the invest account, what's going to happen when I pull out my £100,000? Huge amount of tax. I made £80,000 worth of capital gain. I removed my capital gain allowance of £3,000. So now I'm left with how much? £77,000, which is taxable. The government is going to take a big chunk of that. If I just did one step differently right at the beginning, which was open this account type, which is the exact same amount of time it takes, how much tax do I pay on my 77,000? 0. So please understand the importance of understanding the account types and what you're doing, because it will make a huge difference on your investment journey. And these ISAs apply on different investments, okay? So stocks ISAs, hugely powerful, £20,000 limit per year, per person. So if you have a spouse, they also have a limit, and it renews each year. If you have multiple accounts on multiple platforms, the £20,000 is shared, and you can invest into multiple different things. Sorry, Sheikh, yes?
Yeah, if you invest 20,000 for whatever you invest, I think the government also contributes 25%.
So that's for a specific type of ISA, which I'll touch on now in just a moment. But it does not apply to the stocks and shares ISA.
Oh,
Okay? Any questions on that one? Hugely powerful. This is like your best friend. You say, why?
Why isn't that way? Should there be any catch there?
Remember that point I explained at the beginning? The government gives you a little bit of breathing room to try and encourage you to invest your money. Because when you invest into companies, it stimulates the economy, growth, jobs, all that sort of stuff.
But not only that, when you invest your money, you have a cushion. When you have a cushion to fall back on, the government doesn't have to pay you benefits when you lose a job. So the government wants people to save money and have investments. That's why it created the stocks and shares ISA. So less people have to claim benefits because they have a pot of money that they've invested and they've saved.
Very good point.
So we have covered the why you should do it, inflation, and the fact that you shouldn't leave your money idle, you should have it working. It's an Islamic concept. What is what we have really covered today? Sukuk, gold, equities, savings accounts, property. When, easy now. How, this is a tough part. There are so many different options out there. There are so many different brokerages accounts. Some of you might not even understand what I mean when I say brokerage, but they're platforms that you use to buy funds, to buy gold. For example, to buy the HSBC Islamic Global Equity Fund, the Islamic fund, you don't go to HSBC. It doesn't work. You can't call up HSBC and say, I want to buy this fund. There is a process to doing this. Unfortunately, if we went through the how now, this presentation would be over 3 hours long, and there'd be far more people who are asleep at this point. But we do it other times. Should we touch very quickly on the how? Because usually we have a how.
Yeah.
We have a one-slide how.
Is it on?
We don't have the how on this one.
Okay. Very, very quickly, just to answer your point about the tax wrapper. So the stocks and shares ISA is a particular one where you can invest into actually a few different things. So inside of the stocks and shares ISA, you can buy, can anyone have a guess? Stocks and shares. What else? So you can buy individual stocks, or you can buy equity funds. Very good. What else can you buy in there? I know it's a bit tough because it's misleading in the name, but there's actually other things you can buy inside of it. We've said stocks and shares, yeah. So individual stocks, groups of stocks, equity funds. Yes, you can buy gold funds inside of your stocks and shares ISA. Again, you can have tax-free. What else can you buy inside of your stocks and shares ISA?
Think about the asset classes we spoke about. Which one of them?
Sukuk funds, very good. Okay, so those few things you can do via your stocks and shares ISA on a platform like Trading 212. That's part of the how. Your question was around the LISA. So it's called the Lifetime Individual Savings Account. Okay, try and stay with me here. This particular tax wrapper only serves a purpose for two functions. Does anyone know what those two functions are? Buying your first house. And the other function is retirement. You can only put your money into this investment account for those two purposes. Okay? That's rule number one. If you wanted to pull your money out, let's say before retirement, and it wasn't for your first home, you'd pay a penalty. However, as a way to kind of help stimulate this, purchase of your first home or for retirement, there is a government incentive of a 25% top up to £1,000 a year. So let's break it down. A nice simple example. I have £4,000 because that's the limit in this particular account type. I put £4,000 in. The government immediately will put in an extra £1,000. Okay? And then, to get more complicated, you have two choices. Now, you can leave it as cash, as £5,000, or you can invest it. And you can invest it again to all of those same things: stocks and shares, equity funds, sukuk funds, gold funds, whatever you want. Okay, that is the LISA. There are other tax wrappers, but I feel at this point it might just get a bit too much. So do you want to do just the platforms quickly? You stop contributing at 50. I can't remember the number.
You can open that up to the age of 40 or something.
Exactly, yeah.
Less than 40 years.
Yes.
So if you're over 40, you can't open it.
Exactly, yeah.
I thought it was above 40, but I don't know the exact age.
No, it's 40.
Is it 40?
So 18 to 40. And the other thing is, I think it's just cash.
No, you have stocks and shares LISAs. If you go to AJ Bell, you can open a stocks and shares LISA.
Can I just say that 1,000, do you get it every year?
Yep. If you contribute an extra £4,000 every year. So for young people that maybe want to buy their first home, at the age of 18, they put £4,000 in, or their parents help them out, they get £1,000. Next year, they put 4,000, get another 1,000. And the nice thing is, if you invest it as well in stocks and shares or equity funds or commodity funds, it's growing. So it's getting the £1,000, so the £5,000 is then also potentially growing because it's invested.
Why don't we wrap up and then answer this in the question?
Okay.
The nice thing to realize, I heard sisters over there mention index funds. And then brother over here Sheikh over here mentions LISA. To those of you who aren't familiar with investing, some of these concepts might be quite confusing. Oh, what's an index fund? Why did he say LISA? I thought we were talking about an ISA. There's other types of ISA as well, like innovative finance ISA. And these things can start to get really complicated. So if we bring in more complex topics now, it can be quite frustrating for people who are new to investing. That's why we generally stick to the basics to help you have a basic level of understanding and then go out there and do further research. Of course, we are here to answer questions, but these are just some of the topics we didn't cover today because there's so much more out there which is good to know, and some of it you need to know, but what we're hoping to do is to encourage you to do that research. And everything we spoke about here today, and all of this stuff, Adel and I, and Nispa, we offer paid sessions to do this, where we go through people, we go through their situation, and we give, not advice, because that's a regulated activity, we just teach you how to do it. But all this information is free online. You can find it. The question is, are you going to do it? It's a bit like paying for the gym. Some people pay for the gym and they never go. You've received this education today. Are you actually going to go out there and further it and level up to the level where you are ready to invest or not? So Adel, some of the things that we didn't cover?
Yeah, so one of the key things is everyone always asks us, what's the best investment? And hopefully you've learned today there's no such thing. It's very much dependent on your circumstances. So what are you investing for? And that really comes into the concept of risk profile, the how to invest. We didn't really go into kind of how do you pick? Ahmad mentioned there's like 30 equity funds. How do you pick which ones are right for you? Sukuk funds, there's a few there. How do you select these things? There's the whole matter of how much do I actually invest? How much do I keep in my current account? How much do I keep in cash? How much do I keep in property, stocks, or whatever it might be? How do I go through this kind of whole asset allocation? There's more tax wrapper rules to understand. And there's a concept of lifestyling when it comes to your pension. If you're a young person, there's a way in which you potentially should be investing. And if you're getting closer to retirement, you should have other considerations as well. One thing I want to make a real clear is, yes, the information is available online, and I do encourage you to go and find it. But if it's going to take you years to figure out on how to start, there's a problem there. Because time is your biggest asset when it comes to investing. Every single year you do nothing is a cost to you. So we used to always be afraid of investing is so scary, I could lose all my money. We've shown you today, not many of those investments go down to zero. And potentially you only lose if you sell at the wrong time. So if you're going to take it upon yourself and you're not going to take any action, all this knowledge is useless. Because education without action is pointless. And for me, the big thing is alhamdulillah, like I said, I lost some money previously. But now it's a case of I feel confident enough to not only manage my money. Recently, I was speaking to my dad, and he had some cash underneath the floorboards in our house. I'm not going to say where he lives, so you don't go looking for more. It's all gone. But he's 73 years old, but because he's been stung in the past, he's like, I don't want to do anything. But I had to go through the conversation with him, like, come on, let's do something. You don't know, inshallah, you live to 90, 95. There's still time to potentially grow this wealth that you have accumulated. Let's put it to work. So if you are just saving money and it's stuck somewhere, there's a real big problem there. So if you want to learn more, we do offer something called the Nispa Academy. And the idea is we take you from zero all the way to managing your own money and being able to help your kids. Like, think of that benefit. You are the one that is directly responsible that can teach your kids how to manage their finances. They get their first job, bang, you know what to do. Okay, you earn £500 a month, you know how to put £50 into investments when they're 17, 18. When they get older and they get a bonus, they know how to spend it. So we try and take you, it takes about 6 weeks for most people, from zero all the way to managing your own money. Of course, there is a cost, but think how many years have you not taken action? So if you want any more information, we can obviously talk about it a little bit more. We also have Sister Haneen at the back for the sisters if you want to talk to Haneen. She's also part of Nispa. But that is kind of the session. We do have other resources and other materials out there, inshallah. Check out the website, nispa.co.uk. There's a lot of free resources on there. But yeah, I think now we go to Q&A.
Yes, apologies if we took slightly too long.
Yes.
Part of that, teaching how to do investment, would you also talk about changing the mindset of spending less and investing more?
Yeah, so the big thing, you're very right, sister, is actually the psychology of money. So it's not only a concept, because what I've read online or what I've read previously is everything you learn about money is usually solidified by the age of 17. So what you saw your parents doing, what you saw those around you in your community doing is kind of already embedded in you. So we have to uncover, why have you got certain habits? And we try and do that a little bit, but try and explain the benefits of, the more you put away now, it's almost like paying your future self, paying potentially your kids, paying your grandkids, or sorting out your retirement, inshallah. So that we do try and talk about that a little bit as well. So great point.
We're not going to touch on crypto. Very quickly, some cryptos apparently are halal. Some shuyukh say they're not halal. Adel and I, obviously, you can tell by our beard length and our age, we're not shuyukh. So we're never going to give you a fatwa, is crypto halal or not? There's people on both sides of the argument. Islamic Finance Guru, which is probably the leading education platform for Muslims when it comes to Islamic finance, have a list on their website of which cryptocurrencies are halal. As for how to do it, quite complicated, very many scams out there, and I wouldn't recommend us teaching you in 5 minutes. I'd very recommend speaking to someone who's a trusted source and learning more about it. But we don't talk about it. Why? Because so many people get scammed, and it is quite complicated to do it in the right way. So we just avoid talking about it altogether. And some of it is very high risk. And to be honest, the majority of the population have been living fine without crypto and investing into crypto for hundreds of years. So why do we suddenly need it now? I'm not saying don't. I invest into crypto. But that's the reason why we don't teach it. I hope that's a sufficient answer. Sister, then brother.
You mentioned about the LISA.
Yes, the LISA.
Where would you recommend that you open it? Because you mentioned Asian bells and
Sister's asking where she can open a LISA account. You open a LISA account through a brokerage. There are brokerages like Hargreaves Lansdown, AJ Bell, Trading 212. Think of these like Asda, Sainsbury's, Morrison's, Tesco. They're just places where you can transact on funds, sukuk, gold, open these different types of accounts. Okay? Hargreaves Lansdown is the biggest in the UK, also one of the most expensive. AJ Bell is the second largest, middle of the range prices. And they're the two main biggest ones that the majority of people use that have multiple different types of accounts, such as a LISA. So I would look at AJ Bell. But if you don't want a LISA account, there is a new platform, Trading 212, which is generally cheaper, but it doesn't have LISAs.
How do you mean what do you mean by they are more expensive, like Hargreaves and Lansdown?
So sometimes these platforms charge you a fee just to park your money there. Put your money on the platform, they will charge you 0.25% per year. So for every £10,000, that'll be, was it £2.50, £25, one of them, per year. Whereas Trading 212 don't charge you annual fees. Hargreaves Lansdown charge you a transaction fee every time you buy a fund of around £12. Whereas Trading 212, they don't charge you a fee every time you buy and sell an underlying security. So you have to look into it a little bit, and we can go through it, obviously, but there are fees on these platforms for doing certain actions.
And sometimes the fees are hidden in other things. So it's
like a
foreign exchange stuff. But the example with like the brokerage account, these are effectively like supermarkets, like Ahmad said. If you go to Tesco's, are you charged an upfront fee? No. Everyone's blank face. Was it meant to be a hard question? No. When you go to Tesco's, you're not charged. Can you think of a supermarket where you are charged just to enter the door? Costco. Costco or Amazon Fresh if you need an Amazon Prime membership. So sometimes these brokerage accounts operate in that way where you are charged a fee just to, be a part of that platform, if you will. And then sometimes they make money from other places. So it's just worth noting. The fees are important. Brother.
So if we wanted to invest in some of the companies you mentioned before, like Wahid, right?
Okay.
But through ISA, how would that be possible?
Brother asked if he wants to invest into certain companies, like the companies we mentioned, such as Wahid, via an ISA, how would that work? So you don't invest, so you would invest using the Wahid platform. So Wahid is a bit similar to a brokerage. So Wahid is a bit like a Sainsbury's, okay? But Wahid is different in that it only offers very specific things. So everything on Wahid is Sharia compliant.
So can I use ISA? Yeah.
They have an ISA account and they have a normal account as well.
Most of the investment options, do they have ISA options?
All the investment options we spoke about today, there are ISA options for all of them. Anyone here actually know how Wahid works?
I think they accumulate all the funds and they've got a list of or a number where they would help a person buy a house. They accumulate the funds to get properties for individuals.
Close, perhaps, right way of thinking. But all Wahid are doing is, you know how we spoke about equities? We know how we spoke about sukuk, and there's so many different funds. All Wahid does is it gets those equity funds, it gets those sukuk funds, it gets a few of them together, sandwiches them into a sandwich, and it just lets you invest into it in one go. So without you having to think about which fund specifically do I buy, Wahid just pre-selects it for you. And even nicer than that, it tells you this is the most risky because it invests in more equity funds. This is a bit less risky because it invests a bit less in equities and a bit more in sukuk. And it goes down in levels of risk. So the lowest level of risk, which is full of sukuk with a little bit of equity. So it just has 5 levels of risk. They're just filled with the same equity funds and the same sukuk funds you can buy yourself on Trading 212, on Hargreaves Lansdown, on AJ.
But it is worth noting that Wahid do have, maybe you were mentioning this around the property investment, because Wahid do actually allow you now to invest into property. So what Wahid have done, they started with initial offering, like Ahmad mentioned, and now they have different types of investments on there as well, where you can invest actually into a property, you can invest into startup businesses, you can get your will on there, you can write your will. So there are different things on there.
Is Wahid like Hargreaves Lansdown, or is it within Hargreaves, or can you select it in Hargreaves Lansdown?
So do you remember those equity funds we showed you, or the list of funds we showed you earlier? There's like 20 or 30 different funds. You have to go out there and choose one now. On Hargreaves Lansdown or AJ Bell, you can choose any of them. Or you can choose any of the 30,000 funds in existence. When you use Wahid, you don't get to pick a fund. You just pick a level of risk. You say high risk, medium risk, low risk, or very low risk. And depending on what level of risk you choose, they choose the funds for you. You could do that yourself, remember. If you want higher risk, do you put more equities or more sukuk?
More equities.
More equities. That's exactly what Wahid do. So in the high risk portfolio, they put 80% equities, 20% sukuk funds. You could do that yourself on Trading 212 or on AJ Bell. However, if you don't want to do it yourself because you find it complicated, you can use Wahid, and they charge you a small fee for that service. You get all the money that is made on those investments. It's 100% your investment. Wahid just charge you a 1% fee per year on whatever amount you have invested. So you have £1,000 invested, they take £10 per year.
But it's a great point. We had a conversation with someone recently, and they were speaking about Wahid, okay? And they were like, I really wanted to invest, but then I saw the 1% fee and I was put off. And then we asked them, okay, well, what did you do instead? And they were like, well, nothing. What's worse? Paying a small fee or taking no action? So if you're going to be like, oh, I don't want to pay any fees because I've learned that actually I can do it for myself much cheaper, but then you don't do it yourself, you haven't won here, you've still lost out. And the Wahid are a Muslim business. They are trying to help the Muslim Ummah. So don't be afraid sometimes of fees if it does help you. I personally started off my journey with Wahid. Don't think of these things as potentially expensive or bad. They provide a service for a certain type of person. Sometimes you go to a supermarket, you buy the groceries yourself because you know how to cook. Sometimes you can't be bothered to cook, so you go and buy a ready-made meal. That's what Wahid is doing for you. They're giving you the ready-made meal.
Have you got any sort of figures, for example, in recent years, what sort of returns they've had
the question, do you want to take it? I would say the question is, understand what are they investing into, and then you almost forget what Wahid do.
No. What I'm saying is, because you deal with them or you sort of propagate them, you promoting them.
No. We don't.
Indirectly.
Yeah. So you must have some idea of the sort of returns they've had over the years in various different categories. For example,
So, who can guess? Do I use Wahid? Someone guess. Yes or no?
Yes.
No, I don't use Wahid. Why don't I use Wahid? Because I know how to do it myself, okay? So I have never used Wahid before in my life because I know exactly what they do, and the funds that they buy, I go buy myself, and I save myself the 1% fee. It's a bit like looking at a recipe, you see exactly what's in it, okay, I'll go do it myself. Really, really easy to do. However, the Wahid funds, the most risky fund that they have in Wahid averages at around 10% for the past 5 years, and the least risky fund around 3 to 4%. And it slowly drops for every level of risk. That's it.
Yeah, it's a really important point. Hopefully we all know the famous hadith where the Prophet ﷺ talks about investing the money of the orphan so that it doesn't get eaten up by zakah. Money idle is un-Islamic. Money should be working. You shouldn't be hoarding it in your account doing nothing. You should be stimulating the economy. You should be investing. So that's why we also have the concept of zakah as well, so that you are making it work. You obviously pay, technically speaking, there'll be a zakah on any money that you technically have. The rules will be slightly different depending on what you've invested into. You can go through the calculator and you'll also get sent like a guide that kind of explains the zakah treatment.
Yes, Trading 212, the technical term for it is a brokerage. And within that brokerage platform, there are hundreds of thousands of investments that you can make.
It's an online, it's an app.
It's an app, it's an online platform. Yes, exactly. And then you have to go in and choose the exact investments you want. Do you want sukuk funds? Do you want gold funds? Do you want equity fund? Which equity fund do you want? Do you want to buy an individual company? Do you want to buy Nvidia? Do you want to buy Apple? Do you want to buy Microsoft? Do you want to buy Sainsbury's? That is what Trading 212 is.
So here you can see, if you were to create an account and you go to open an account, you get a choice of these ones: Invest, ISA, CFD. Just to make it nice and simple, everyone, CFD, haram, haram, haram. Invest and ISA are fine depending on what you put inside of it. ISA is obviously for the tax wrapper. Why would anyone open the Invest account if the ISA gives you all those tax advantages? Exactly. If you've got more than £20,000 to invest, you might then start using the Invest account. But that is Trading 212.
Sister asked the difference between an ETF and an index fund. I want to say these questions are a bit technical, and you don't have to stay for this section, and I will not be offended if you leave during the Q&A session. So please feel free. But an ETF stands for Exchange Traded Fund. So you know how Adel spoke about a fund earlier? It's just a grouping of different investments. So an ETF is just a fund that you can trade throughout at any time during the day, because it trades on an exchange. That's why it's called Exchange Traded. So what's something that trades? You know, like an auto trader. Auto Trader is a place that people buy and sell cars. So Auto Trader would be the exchange, people buy and sell cars on it. Or eBay. eBay would be an exchange, people buy and sell stuff on it. So funds that trade on an exchange are called ETFs. Some funds don't trade on an exchange. They just trade once a day. You put in an order to buy it, and at 11 o'clock in the morning that day, they transact and they all trade. But ETFs, they trade any time during the day. An index fund means that the fund tracks a specific index. And an index is a grouping of a certain number of stocks. An index fund can be an ETF. So you can have a S&P 500 index ETF fund. There are some Islamic funds which are not ETFs, but they are traditional funds. ETF is just
think about it this way, okay? You might have a particular investment as a fund, okay? In terms of how it's actually bought and sold, oh, my laptop died. Okay, you have ETF versus fund. Index is completely different, okay, whether it's index or active. That's a different comparison to make, okay? So just if you understand ETF versus fund structure,
Okay, I'll Google it as well.
yeah,